Welcome to this week's crypto forecast for the week ending March 17th, 2023. My name is Justin Bennett with Daily Price Action, and in today's video, we are going to talk about the dollar, the DXY, the S&P 500, Bitcoin, Ethereum, and VeChain. So starting right out here with the DXY, the US dollar index, the market does look pretty weak here after looking to close below 104.12. So this was the previous range low, and you can see where the DXY last week actually failed to hold above this closing price back here. So this was kind of our first indication of weakness, this minor deviation above this area around 105.20 or so. And so far, the DXY is now closing below 104.12. Now, the one thing I did mention today is that 103.50, this level back here, this is not just a key daily level, but it's also the yearly open for the DXY. Okay, so keep this in mind. 103.50 is going to be very significant support for the dollar, to where we could see at least a move back here toward 104.12, especially when you consider, guys, that we do over the next 2 days have CPI and PPI numbers coming out of the US. So keep that in mind that we could see a bounce here from 103.50. But like I said, with the DXY trading back below this level here at 104.12, this is now the level that bulls have to reclaim. If we see a daily close back above this area, then this becomes a fake out. We get that move back toward 105.60. But if we do see the sell-off from this level up here on tomorrow's CPI, all right, if we get up here, see the sell-off, break below 103.50, then we're looking at potentially this pivot back here around 102.60 and potentially even that area around 101. And that really wouldn't surprise me at all if we did see 101 if the DXY gets below 103.50, because if you look all the way back here, this is essentially our range low, and the range high is that 105.60 level. Okay, so essentially this is our range right now for the DXY, to where if we see it break below 103.50, get below that on the higher time frames, we're looking at, again, 102.60 and potentially that 101 area. Now let's talk about the S&P 500. This is the SPX 500, and the reason I like talking about this when I look at crypto is because the crypto market does tend to follow equities. Now, recently, over the past 24 hours, the crypto market has not cared at all about the weakness here from the S&P 500. Now, with that said, the likelihood of the crypto market eventually catching up to the weakness here is very high. In other words, if we see the S&P 500 continue to break down here, the crypto market is eventually going to follow. All right, the crypto market is not going to ignore the number one risk asset, which is equities, forever. Okay, now if we look here, this is the channel I've talked about where we have the highs up here. And you can see that we also have this low. This is the COVID low. Okay, March 2020, you can see we've got the lows through here. And right now, the S&P 500 looks to be closing below that. And if you'll notice, even during this period, okay, right back here, the S&P 500 never closed a day below it. Okay, so we have not seen a daily close below this level until today's session. You can see that last week on Friday, the S&P 500 closed below that all-time high trend line. And so far today, it looks like we're getting that close below channel support. All right, so a relatively weak look here for the S&P 500. Again, the crypto market really hasn't seemed to care. But if we were to see something like this, a breakdown retest of these lows, maybe some sideways action here, and then an eventual break lower for a run at these lows down here, I mean, at some point, the crypto market is going to start paying attention to the weakness that we're seeing here from the S&P 500. Now, alternatively, the S&P would have to get back above not only this level up here, but also this 3910 area that I mentioned on Twitter last night. Get above all of this on a daily closing basis. We could see some strength here, but as of right now, this is a confirmed breakdown. All right, so let's talk about Bitcoin, which has had an insane rally here over the past 24 hours. Ever since Sunday, it's up about 20% in the last 24 hours. And right now, we are seeing a potential daily close above this level at 23,800. Now, there are a few hours left in the daily session, so we'll see if the market can close above this. If we do get this close, then this kind of becomes a must-hold level on a daily closing basis. Any daily close back below this level, that becomes a deviation for the move lower. However, at this point, we do have to at least consider the potential for Bitcoin taking out these equal highs around 25,000, okay? Because there are a lot of short liquidations that have built up here. So we could see a scenario where Bitcoin comes up here, tests 25, punches above it, takes out those shorts, and then maybe we get a deviation for the move lower. Okay. Now, I originally thought last week I was looking for this area around 18,400. All right. This was my target and we came close to it. However, we stopped right here at about 19,600 and the rest is history. So I think eventually though, we do see lower from Bitcoin here. But when you just consider this range that we've been in between these two highs, also that 18.4 level. Okay. And then also we've got the FTX lows too. Don't forget about those. But as of right now, we are looking at this range between 25,000 and 18,400. And considering the fact that we've seen this rally now, and there are a lot of short liquidations up here, a move above this level followed by a deviation shouldn't be ruled out. But like I said too, keep in mind that we do have CPI and PPI coming up here this week over the next 48 hours. So if Bitcoin were to lose this level, if we get the close up here today, and then it loses this level later this week, we get the close below, then that becomes a deviation for that move back here toward some of these support levels. So next up we have Ethereum, which is retesting this trend line that I've mentioned. All right, so you can see that over the past few months, Ethereum has been moving within this triangle pattern. Now, last week I thought that we were going to see 1300, which is the bottom of that triangle. We never did see that. The market held above 1420. This is the support level I mentioned last week. We held above that, closed above 1500, and now we're also looking to close above 1590 today potentially. All right, now you can also see though where Ethereum came into a bit of selling pressure today right there at that trend line. Okay, so 1700 is going to be the level to break. If we see Ethereum break that, then there is the potential for a move higher. Now, how much higher, we'll have to wait and see. However, like Bitcoin, we could see a move at least above these highs up here to take out those shorts that have built up. But when I look at the short liquidations here for Ethereum, there are short liquidations all the way up here toward 2000. All right, so I can't say it's likely at this point, but we also have to consider that if we see Ethereum break above 1700, base above this area, take out this high back here, then there is the chance that we do see a very quick rally up here toward 2000, followed by potentially some type of deviation from there. All right, but that's only if we see these markets break out. Keep in mind too, though, flipping back to the S&P 500, guys, this has broken down. So the crypto market isn't paying attention to this now, but it's only a matter of time, in my opinion, until the crypto market does start following the S&P 500 again. And lastly, I want to talk about VeChain. So looking at VET here, you can see that the market has moved within this range, came close to the range highs back here, but then we've got these range lows right around 2.15 cents. Okay, so this is going to be your range low, and you can see where we recently just got a deviation below that. Okay, so Sunday closed above, we're seeing more follow through today. So essentially right now, we could see a bit higher from VET as long as the market holds above this level down here. So hold above this, we could see a move higher. This is the level I would pay attention to though. So this level right around 2.6 to 2.7 cents and up toward about 2.8 cents. This entire area is going to be critical resistance for VET, to where if we do see a move up here, expect, some type of rejection from that level. And again, that's only if we see this market hold above this level down here. If we see the close back below, then this idea is off the table. We probably don't see a move up here from VET. All right, but as of right now, this does look like a bullish reclaim of the range lows that we've seen since all the way back here in June and July. All right, so that's it for today's video. I will leave you with this takeaway though. I said it a couple times, but just keep this in mind. Even if we do see a rally from the crypto market, keep in mind that the S&P 500 is starting to break down. And these are macro levels. All right, these are massive levels that we're seeing start to break down. So be very careful if we do see a rally from crypto. In my opinion, it's nothing more than a liquidity grab and a bull trap. Okay, so keep this in mind as we move forward. All right, that's it for today's video. If you enjoyed the content, found it helpful, be sure to subscribe to the channel and smash that like button. I will talk to you guys again next week.